Well, that's a power pack lineup, isn't it? And we'll keep at it all day through. Just want to quickly spend 2 minutes looking at the market itself, right? I mean, how is the setup this morning? The GIFT Nifty is indicating a flattish kind of a start. It's neither here nor there. And I mean, you know, you'd take it with both hands because the last few days have really have seen astounding volatility. I'll just start with, a few points. Budget days are usually extremely volatile, right? I mean, there is no question about it. Go back the last 4 or 5 budgets and we've seen massive swings, 500, 600, 1,000-point swings in some cases. The handoff from Wall Street is weakish. The S&P is down about 1.6%. The Nasdaq is down about 2.33%. The Russell is down about almost nearly 3% as well. The message from the Fed overnight, the big message, if you really want to just know one thing, it is that rate cuts are coming, but not in March. I mean, they've kept the optionality open that March perhaps is also possible, but most likely it's going to be post-March, so it's not imminent. One new thing which has sort of emerged, which is completely out of our minds, was these regional U.S. bank troubles seem to be creeping back up once again. One particular regional bank in the U.S. posted a loss, and they cut their dividend massively as well. There is an index in the U.S. which tracks these regional banks that was down 6% last night. That is the KRE index. So, I mean, this is a new thing which the market has not got on its minds. The US 10-year lost about 10 basis points. We left off under 4%. You would think that's very dovish. But the reason behind this 10 basis points fall is not what the Fed did or said. It's basically the fact that these US regional bank troubles started to emerge at the margin. So I'm not sure if this 10 basis point fall is really all that positive in that sense. We are past January. January is seasonally the worst month for stocks, not just here in India, but globally as well. We are in the month of February. So at the margin, seasonality-wise, that's a bit of a positive. And of course, I mean, as I said, the last 3 days have been spectacularly volatile. Plus 400, minus 200, and yesterday plus 200 as well. All said and done, we're in a 300-odd point range. 21,450 to about 21,750 is that range for the Nifty. Beyond 21,750, which is the upper end of the range, it's possible we take that out. The all-time high comes into view, which is about 22,124. Will that be as easy, at least today? I think that's the question we need to ask, and that will depend on what is announced today. The Nifty Bank, that's the much weaker index really here. That needs to cross 46,824, which is the 61.8% retracement of the fall that we've seen. And on the downside, we must, for bulls, it's imperative that we don't break the recent low on the Nifty Bank, which is about 44,429. My sense is, and I said this earlier as well, what happens on the day of the budget, if it is big enough on the upside or downside, it's followed through in that same direction over the next 1 month. We've seen that 13 out of the last 17 or 18 budgets or so. So there is enough opportunity beyond just this day zero, which is the day of the budget, to participate depending on what is said and what is done in this particular budget.
Absolutely. I think the big statement is the Fed saying that don't expect any rate cut in March. And you had a steep fall in the US markets overnight as well, right? The Nasdaq, in fact, saw its worst day in the last 4 months.